The spring real estate market has been going strong in Edmonton. New listings are up, sales are up, and house prices are up, and they've finally stopped increasing interest rates. But that's not the whole story, and we're going to get into all the exciting details in this month's housing market report for the month of May 2023. So if you're thinking about buying or selling a home this year, then you're in exactly the right place, because I'm going to address some of your burning questions about the Edmonton real estate market. Like, is it a good time to buy or sell? Are prices going up or down? And how much can you really negotiate on prices? I've also got a lot more content about the Edmonton housing market on its way, so if you want to make sure that you never miss out on the latest tips, updates, and insights on the Edmonton housing market, make sure to hit that like button and subscribe so that you never miss another video. Some of you that have been following me for a while may have noticed that I missed my April update, and we're quite far into May yet, and I haven't gotten this video out. I wanted to apologize for that. Going to be making it a priority again to get these market update videos out to you. I've just been really busy in the last 3 months. I've actually been #1 in my office for February, March, and April. Didn't quite make it in January. I came in at #2 in January, but I've been incredibly busy, and it's been a little difficult to get these videos out because I've been busy servicing clients. And I really couldn't have done that without the support of this channel. A lot of my clients have come from YouTube recently, and I really appreciate all the people that have been supporting me for a while and watching my videos, and of course reaching out and booking the free strategy calls. Couldn't have done it without you guys. And of course, if you haven't booked your free strategy call yet, just go to booktrevornow.com. You can select the time on my calendar, and then we can have a chat, and I can find out exactly what you've got going on with your real estate plans and help you however I can. All right, so let's get into the rest of the video. Okay, so let's start off by looking at the market status as a whole. In Edmonton, the market status in the last couple months has steadily moved from a buyer's market to closer and closer to being a balanced market. We're now sitting at a 29.56% listing absorption rate, meaning we're just on the cusp between a buyer's market and a balanced market, but that's only if you're looking at the market as a whole. If you look at where we were at in February, we were only at a 22.52% listing absorption rate, and once we got into March and April, that's really picked up, and the market has become a lot more balanced overall. The average price across the board in Edmonton was sitting at $385,681, which is up 5.23% from March 2023. Pretty significant increase in average prices across the board there. Later on in the video, I'm actually going to get into some more specifics for different types of properties and what's been happening with average price, median price, and benchmark price, which is probably the most important one. But let's continue on looking at the market as a whole. In April, there was a total of 4,659 active listings at the end of the month and 1,377 sales. So the number of active listings are up 8.27% from March 2023, but they're still down from April of 2022. So we're not getting quite as much listing activity as we did last year. And the sales are up 9.55% from March 2023, and they're down 31.73% from April 2022. So the sales are picking up this year, which is normal for the spring market, but they're still down significantly from last year. And this is something that I've been talking about probably for about 6 months, that the number of sales are down about a third or 30%. So there's 30% less sales happening than what we were seeing this time last year. I just wanted to quickly zoom in on the 13-month market history on what's been happening across the board here in Edmonton. And this basically shows you in a bar chart format how the balance of the market has been shifting over the last 13 months. And you can see that in April of last year, there was 4,819 listings at the end of the month, and there was 2,017 sales. Now we're sitting at significantly less sales, 1,377, and our inventory is actually a little bit lower from last year as well. We did have the dip between April of last year and now, but now it appears that the market is recovering that balance. Okay, so now let's talk about average days on market. Again, we're still looking at the market as a whole, so that includes all property types. That's now sitting at 45 days in April. So those numbers have started to come down a little bit. They peaked at about 60 in December, and it's come down to 45 in April. Still not moving quite as quickly as it was last year when we were sitting at 31 days on market, but it was pretty hot last year. 45 days is definitely an acceptable number. Now we're gonna look at market distribution, and this is just to show you what price points homes are actually selling in and what percentage of the market that makes up. So if we look at homes under 200,000, that represents 21.13% of the market, at least in April. The next bracket is 200 to 300,000 essentially, and that represents 17.31% of the market. Between 3 and 400,000 was 23.91% of the market. So that's actually the biggest segment when you're looking at the market as a whole. And between 4 and 500,000 was 18.65% of the market. After that, between 5 and 600,000, we've got 9.74% of the market. And between 6 and 700,000, it's 4.43% of the market. It keeps dwindling down from there, which goes to show that the number of people buying expensive homes over 600 or over 700,000 is a very small part of the market. So if you're buying in that market, it's gonna be more likely a buyer's market for you. Whereas if you're selling, it's a lot softer market, especially since the interest rates are still elevated. I've certainly noticed a lot more people buying homes in that lower bracket, and that's why you see the biggest share of the market between 3 and 400,000. That's definitely that hot spot. Whether you're looking at condos or single family homes, even in the single family homes market, there's a ton of people that are now trying to get in under 400,000. It's still a pretty big group between 4 and 500,000, but it's definitely getting a lot rarer to see people over that 500,000 price if they're looking at getting into a single family home for the first time. Okay, so that wraps it up for the market as a whole segment. Now we're gonna get into specifically the single family home segment. A lot of my clients are in this segment, so I think you'll find this more useful for you. And of course, if you do want more specific guidance, again, this is still general, but if you're actively in the market, or you will be in the next 6 to 12 months, I do encourage you to reach out and book a free strategy call with me at booktrevornow.com, because I can zone in on the certain markets that you're looking at and give you some of these same stats, but for the properties and areas that are relevant to you. And that's gonna be a lot more useful for you than just a general market overview. There are different pockets of the market. It's not just about price, even different pockets depending on the age of the property. If you're looking at older stuff versus newer stuff, that makes a difference. All these different factors make it so that every little itty mini bitty market has a different sort of mix of conditions. So I do encourage you to reach out to me if you'd like more specific advice and guidance if you're looking at buying or selling a home this year. Okay, so let's take a look at the Edmonton market in single family homes. It's sitting at a 26.19% listing absorption rate. I was actually surprised to see this because in my experience, anecdotally with my clients and what I'm just seeing in the market day to day, I found the single family home market to be rocking and rolling pretty good. So it was interesting to see, just from a purely statistical viewpoint, that it's still technically a buyer's market, where I will cycle back to what I just suggested of booking a call with me, because this might be a little bit misleading. You can see this information right here. It says, oh, we're technically in a buyer's market, but I can tell you that it's definitely not the case for a lot of people looking for single family homes. It's quite common right now for single family homes under 450,000 to get multiple offers the first few days that they're on the market, and to sell almost instantly, or in that first week at least go pending. It's also not uncommon to see these multiple offers create over list price offers. I've been seeing this quite regularly. Now, this is not across the board in single family homes. As you can see from the market stats here, the balance, it's still technically a buyer's market, but pretty close to a balanced market. I would venture to say that overall you could probably say we're in a balanced market for single family homes, but there are certain pockets and certain price points and ages of homes where it feels more on the seller's side, and we're actually seeing prices go up a little bit. So if you were on the sidelines wondering if you should buy a home right now, you were waiting to get a little bit more confidence in the market that prices would at least stop going down like they were in the fall and the early winter months, then now might be a good time for you to buy. Remember, I said that's one of those burning questions that you have. If you wanted a little bit more confidence that at least things are going in an upward direction, I am seeing that evidence in the single family home market for sure, especially if you're looking at homes under 500,000. Taking a quick look at the 13-month history for single family homes, you can see that we're nowhere near where we were last year when we had almost just over a 50% absorption rate, and that was seller's market territory. It was even stronger seller's market in February, March kind of thing, and it started easing off by April last year. So we're not seeing a situation like that, but it's definitely moving into territory where prices are certainly not going to be coming down for homes in that price range that I've talked about already, and they may actually start to go up or inch up. I'm not seeing like crazy upward pressure, since a lot of people are still very price conscious and price sensitive because of these high interest rates. A lot of people can't afford anything more than $450 or $400, sometimes under $350, and they're just looking for those properties that they can make work at that. There is that segment of the market that's getting a lot of the action. Now, looking at the average price of single family homes in Edmonton, that's sitting at $492,867, which is up 3.48% from last month, but it's still down from April of last year. So it's down 4.39% from last year. So it's really important to look at what's been happening on a monthly basis, not just where they are compared to last year. Because if all you did was look at it from last year, you could say, oh, prices are going down. Well, they might still be down from last year from an average price perspective, but if average prices are starting to go up now, that story might change relatively soon. All right, so now let's look at the inventory for single family homes. It was sitting at 2,898 active listings at the end of April, and there were 759 sales in April. So the active listings are up 6.82% from last month, which is normal activity. It's the spring, a lot more people get their homes ready and start putting them on the market. And that number of listings is still actually up compared to last year. So this is a bit different than what we saw when we looked at the market as a whole, that the number of actives are up 27.95% from April of last year. And that just goes to show that the single family home market is not nearly as intense as it was last year. We are getting more listings. For sales, they were up 12.78% from last month. Again, just moving more into this, deeper into the spring market. Sales pick up, that's normal, but they're down 33.42% from April 2022. Same thing I talked about earlier in the video. There's about a third less sales than there was last year, so it's not quite as insane, but it's still a robust market. Last year was pretty crazy, but if you looked at it historically, I don't have those numbers in front of me, our sales volume's actually not bad at all. Now, if we compare those actives and solds over the last 13 months, you can definitely see how the balance has shifted. In April of last year, we had 2,265 active listings at the end of the month and 1,140 sales. You can see that increase in inventory we have now with the 2,898, but the sales are not nearly as intense as they were last year. Average days on market are sitting at 43 days for single family homes, which has been coming down. Again, those peaked not in December for single family homes, but in January when it got up to 64 days on market, and it's kind of been coming down since then and sitting at 43. Not nearly as crazy as it was in April of 2022 when it was at only 23 days on market. Now, in terms of market distribution, again, that's the price ranges that homes are actually selling for. You can see that under 200,000, it was 1.45% of the market. So if you're looking to buy a detached home under 200,000, good luck. And if you're looking for something between 200,000 and 300,000, that represents just over 10% of the market. So it's still a very small percentage of the market. There are detached homes in that price range, but they're usually in certain areas and they're going to be certain ages, and a lot of times they might need quite a bit of work. Just keep that in mind. Okay, so between 300,000 and 400,000, there was 27.49% of the market there. So that's very similar to the $400,000 to $500,000 price point that had 28% of the market. So you can see that between the two of them, that's over 50% of the market is between 300,000 and 500,000 for detached homes. There's still a decent part between 500,000 and 600,000, so maybe I spoke too soon when I said under 500,000, but 16.65% of the market is still between 500,000 and 600,000, decent chunk of the market, and then between 600,000 and 700,000 is 7.75% of the market, and between 700,000 and 800,000 is 3.88% of the market. After that, we've got less than 2% between 800,000 and 900,000, and less than 1% between 900,000 and $1 million. After that, between 1 and 1.5 million is 1.41% of the market, and very low numbers after that. Now, I mentioned earlier in the video that I wanted to get into some more specific details on pricing. So now we're going to look at average and median pricing for all the different types of properties. So the all residential average price was sitting at $386,000, which was up 5.2% overall from month to month, and down 6.3% from last year. So again, just saying, yeah, we're down from last year technically, but prices are going up now. Median price was sitting at $365,000, which was up 3.4% month over month and down 5.9% year over year. Now, detached homes, the average price was sitting at $493,000, which was up 3.5% month over month and down 4.4% year over year. And median was sitting at $447,000, which was up 1.8% from last month and down 4.9% year over year. Semi-detached housing, that's like half duplexes. The average price for that was sitting at $379,000, which was up 3% from last month and down 4.8% from last year, so pretty similar to detached. And the median was sitting at $375,000, sorry, which was up 0% from last month and down 3.1% from last year. And for row/townhouses, so this is mostly townhouse condos. I think they might include something we call residential attached in this category. I could be wrong on that. I'll double check for the next one. But the average price for row townhouses was $260,000, which was up 10.3% from last month and down 5.1% from last year. And the median was sitting at $268,000, which was up 19.2% from last month and down 0.8% from last year. So seeing some pretty crazy numbers in terms of price for row/townhouses there. And then apartment condominiums, they were sitting at an average price of $183,000, which was down 2.1% from last month and down 7.2% from last year. And the median was $172,000, which was actually up 1.2% from last month and down 2.3% from last year. So out of all of these, you can see that apartment condos are once again underperforming compared to everything else. Condo owners just can't seem to get a break. Prices always seem to be coming down for condos, or at least apartment condos. Might sound a little savage. Hopefully that changes. That market's just been in a sort of depressed state for many years now. Doesn't seem to be recovering the same way the rest of the market is at the moment. Another thing I wanted to comment on is what's going on with new listings. So even though the number of new listings in the market has gone up, just looking at the market as a whole again, there was 2,517 new listings, which was up 10.9% from last month and down 24.7% from last year if you're looking at the year over year number. That's sort of interesting. Last year was pretty crazy, but we're not getting quite as many new listings as we did last year in the market as a whole. Some of this I think might be due to the fact that increased interest rates is going to prevent some people from listing their property if they're not already up for mortgage renewal. So if you've got a mortgage rate and you're sitting at like 2% or 3% or anything under the current rates of like 4.5%, you're not gonna move if you don't have to, right? If you've still got another year or 2 or 3 left on that, a lot of people are gonna choose to ride that out and make the home work for them. Whereas if they're already up for renewal or they're getting into the market, then they just have to deal with the new interest rates right now. But I do think there's a segment of the market that maybe would have moved, but they've decided to hold off because they've got a good interest rate on their current mortgage and they don't want to lose that. So that's one of my ideas on what's causing there to be less listings than there were last year overall. The last thing we're going to look at is the benchmark price. And this is one of my favorite stats to look at. I find that it's a little bit more stable than average and median prices because those can be affected, especially average prices can be affected by a lot of higher priced properties selling or a lot of lower priced properties selling. And those average prices certainly come down a lot when interest rates go up because a lot of people just end up buying a cheaper house and that will drag your average sales price down. Whereas the home price index, that's basically taking a benchmark home or benchmark condo across the city, which is one way of looking at it. It's like the most common or most typical home attributes in terms of when it was built, the size, does it have a garage, what size of garage, all that kind of stuff. It's got certain attributes and they track the value of that typical home over time. The home price index, the benchmark price for the Edmonton as a whole, was sitting at $371,000 in April, which was down 0.2% from last month. And it's saying it's down 9.8% from last year. And if you look at the trend, you can see that we certainly peaked last year, probably around April, and we took a steady train down as we got into the summer markets and then into the fall and winter. But things started to come up after January. Technically, we're seeing a slight decrease from last month, but that's still pretty stable to me. And it just kind of shows you the actual trend in real home values. We do have different benchmark numbers for specific property types. So for single family homes, the benchmark price is sitting at $438,000, which in this case is saying it's up 0.2% from last month and down 9.2% from last year. Apartments, the benchmark price was $172,000, which was down 3% from last month and down 6.6% from last year. So even though I was talking some smack about apartment condos, they're not down as much compared to single family homes if you're just looking at the year-over-year number, but they are underperforming right now. Then for townhouses, the benchmark price was $220,000, which was up 0.6% from last month and down 9.5% from last year. So that's it for the Edmonton real estate market report for May 2023. I hope you got value out of this video. Again, like and subscribe if you want to make sure you don't miss another one of my videos. I've got some more content coming out here soon. If you click over here, you can subscribe, and if you click over here, you can watch another video. All right, thanks so much for watching, and I'll see you on the next one.